Aloha, big wave trading family. I hope everyone's having a great weekend. We finished off the previous trading week, which was a seasonally very bearish week with gains, with the Dow Jones Transportation Average leading the way, up 4.2% on the week. On top of that, the Russell 2000 was up 1.33%, leading. I think it would have been much better if it wasn't for one stock, Apple, which weighed on the Dow Jones Industrial Average, NASDAQ, and NASDAQ 100. If Apple would have participated with the rest of the market, I think the previous week could have been a very, very solid week for stocks. And it's pretty impressive considering the deluge of negative headlines that we received the past 2 weeks. And then once again this weekend, I don't care what side of the fence you are politically, but the guy in charge now is about as insane of an individual as I've seen anywhere in my entire life, and I cannot believe that that's our president. But the rhetoric with North Korea is really, 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 it's just insane to me. And then the stuff with the NFL and NBA, it just becomes more comical. I think it can't get any more ridiculous than it does. But I believe that because of stuff like this, there is a wall of worry. The market is climbing. However, if all of a sudden the market says, screw it, this stuff's insane, and decides to take a safety defensive measure, and by selling off, I won't be surprised. Obviously, I'm making this video Saturday evening on Maui, so futures aren't open yet. And I don't know what's going to happen following the new North Korea, United States of America rhetoric. But the market's shaken it all off before, so we'll see if it continues to do it again. So with that being said, the IBD put call closed at about 1.0, 1.02, depending on which, if you look at the paper or the website. So the fear is slightly elevated. You can read my new positions analysis that I penned this weekend and see that a lot of the sentiment indicators actually grew more fearful. Some grew slightly more bullish, but the majority pulled back. So that wall of worry, it looks like we want to keep on climbing. And if that's the case, there's a few new long positions I want to add to my already heavily long portfolio. I'm once again back to being maxed out. Once I take these new long positions, if everything fills, I once again have no more cash on hand, and I only have one hedge, I believe, right now, TVIZ. It's the only hedge I have. It's the only one working, so this is about as long as you can get. So we'll see what happens when the futures market opens on Sunday on Maui. The first new long position I want to go over is SCI. SCI is a CanSlim quality only stock, but this is a beautiful uptrending stock overall. It's a very, very, very nice uptrend, very symmetrical. It's uptrend, nice long consolidation periods. The only problem is that the 200-day moving average is consistently extended from the price, but that just shows we've got a very strong trending stock, and hopefully it continues. If not, we don't risk much. So I want to get long SCI Monday morning. It's a CanSlim quality stock, so 2% of my portfolio count available in my portfolios at 35.02 limit order, the high of the day, the closing price. And my first cut loss level, you can use 34.70, you can use 34.59, you could use 34.58, or you could use 34.42. Now, you could use any of those. You could use all four, you could use 1, 2, 3, 4. And for me, I think I'm just going to use the one stop at 34.42 personally. So 34.42 will be my one and only final cut loss level on SCI. 2% of my capital, 35.02. Very, very nice pattern. I just wish the 200-day moving average was closer. But overall, it's hard to find any fault with this stock since its February 2016 lows. And like I said, if it fails, no big deal. If it works, I mean, let's say that the worst you can do is lose maybe a couple of percentage points. And if you just get a move similar to the move from December to August, you're looking at over a 10-to-1 reward risk ratio. I'll take that any day. Then we have VLP. VLP is a CanSlim quality stock. CanSlim quality due to the earnings per share, the relative strength rating and all that's pulled it down, but still, based on the earnings per share and the overall fundamentals, return on equity, sales, profit margin, stuff like that, debt, this is a high quality stock. So 2% for being CanSlim. It was confirmed in my price volume BOP scan, so it's supposed to be 3% of my account capital. I definitely do not have that even to put to work in this name, but if you do, obey the signal. Should be getting long. Limit order 42.24. That's going to be my limit order, the high day. It's not extended from the 20-day moving average. And then I'm going to use two cut loss levels, 41.54 and then the emergency 40 level. If 41.54 goes, whatever the new low a day is, that will become the new final cut loss level. This is just an emergency stop to see if the stock doesn't blast higher immediately, it may need to pull back and fill just a little bit more before taking off. It happens often, doesn't happen all the time, but it happens more often than I would like it to. So that's why I'm going to use two stops on this. But the idea is that the 40 level will never come into play. Either half or all of my stops will be raised until this comes into play. The only way this level could even possibly remotely come into play is if the stock continues to pull back on low volume, keep that heavy green bop, especially if it grows, and if it does on low volume each day, then I'll probably hold it all the way back to 40. But that's really cutting it close. We'll see what happens. The next new long position, MVIS. Now this is a special situation stock. Once again, two different kinds of beta methodologies I'm testing, the RSI 14 oversold swing trade methodology and the going long any stock, making my perfect speculator scans based on the technical requirements, the only thing changing being any price qualifies. So if it's a 50-cent stock, if it's rallied from 25 cents to 50 cents, it qualifies in the perfect speculator scan as much as a $250 stock going to $500 stock does. This MVIS was in my perfect speculator scan, any price scan. Want to get long, limit order 269. It's not extended from the 20-day moving average. It's a quote higher quality stock. So I'm not using 268. I'll be using 269. First cut loss level. This is the main reason why it's new long. It's right there, 258. For anybody that takes this trade, I suggest that may be your only stop. I want to see this one continue to bounce immediately, or I want out. But now me, I'll put half my stop at 258 and my final half at 243. It's splitting hairs. I don't mind if this one fails all the way down. It's got 10%. If I use both stops, I'll probably lose right around 6% on the position. So it's well worth it for me. So MVIS, 1% of my account capital, limit order 269. First stop 258, second stop 243. And then the final long position, probably my favorite one overall, but once again in the same similar situation SCI is. BCO is printing a bullish engulfing candle price bar. There is no heavier volume on the print. There is no heavier or stronger green bop on the print. There's just that bullish engulfing price bar, engulfing the previous few sessions price action. This looks like it's basing out quite nicely. It's a long ascending uptrend. Now you kind of have an ascending base pattern forming here, almost a flat ascending base pattern right here. So we're kind of right at support with a very close level cut loss level, very close first cut loss level, excuse me. Blah, blah, blah. Is that 80.10? So the first cut loss level is Friday's low day, 80.10, hits 80.05. I'll be out of half of the ad. And then the final cut loss level on this ad position, 78.20. It moves below 78.20. I'll be all out of the ad. But this is a very nice looking technical pattern. This is a can slim and perfect speculator quality stock, perfect speculator scan quality stock. Beautiful previous uptrend. All reasons why I'm getting long, even with the stock not having heavier volume and not having a surge in bop. It's extended from its 20-day moving average. So normally, this is 2% can slim, 2% perfect speculator, 4% total. Since it's an ad signal, that's half for 2. And since it's extended from the 20-day moving average, it's halved again. So it's just 1% of my account capital. Once again, 81.45 the limit, 80.10 the first cut loss, 78.20 the final cut loss. So that's it. BCO, SCI, those are your higher quality ones. VLP, one of your lower risk ones. And MVIS, the potential for a home run, considering that every time it pulls back and retraces part of its move, it rallies. So it has a history of retracing and rallying, retracing and rallying. Hopefully it'll be doing that here again. All right, everyone. Great luck on Monday. We'll see what happens following all the weekend fireworks. It's pretty ridiculous, everyone. I cannot even sugarcoat it. It's ridiculous.